the Great Depression. It all began with the stock market crash of October 1929, when billions of dollars were wiped out in a single day, plunging the country into financial chaos. Banks failed, businesses shuttered, and unemployment soared to unprecedented levels, reaching nearly 25% by 1933. Families lost their homes and life savings, and breadlines became a common sight in cities.
Hello everyone, welcome to the special weekend edition of Markets Around the World. I'm K2, and today we've got some key updates to share. The Dow Jones fell 1.8% last week, its longest losing streak in years, but the Nasdaq edged up by 0.3% thanks to tech stocks. The S&P 500 dipped 0.6%. November's CPI hit 2.7% yearly, hinting at possible Fed rate cuts, though core CPI at 3.3% shows inflation's persistence. PPI rose to 3%, adding complexity to the Fed's next moves. Mixed signals in Asia, with China's market up on stimulus hopes. Europe's Stoxx 600 near highs, driven by tech. Broadcom hits $1 trillion valuation, showing tech's strength. With the Fed's rate decision on the horizon, markets are cautiously optimistic, balancing between rate cut hopes and inflation concerns. Stay tuned for more insights, and remember to subscribe for the latest on how these developments could affect your investments. Let's dive in. Donald Trump's victory in the November elections, combined with the prospect of interest rate cuts and record inflows into U.S. stock markets, have set the stage for an anticipated Santa rally for the S&P 500 in the last trading days of 2025, according to Goldman Sachs's leading technical strategist. Over the past 9 weeks, U.S. equity markets have seen an unprecedented $186 billion in inflows, with capital flooding into American stocks, following Trump's electoral win on November 5th. The Federal Reserve is poised to reduce its benchmark interest rate by 0.25 percentage point next week, continuing its strategy to gradually lower rates despite changing economic conditions. Economists anticipating this cut argue it aligns with the initial rapid rate reduction signaled in September, marking 3 consecutive meetings with rate decreases. This action would adjust the Fed's benchmark rate to a range of 4.25% to 4.5%, marking a full percentage point decrease from its peak in early September. Inflation in the U.S. has shown signs of increase over the past few months, causing concern, but there's optimism that this inflationary pressure might ease by next spring. After a period of decline last spring and summer, both consumer and wholesale prices have unexpectedly risen. However, recent price reports hint at positive developments, suggesting this uptick could be short-lived. Analysts remark, "We don't see signs of a broad-based pop in inflation pressures, indicating the current inflation surge might not be a long-term trend." Christmas has come early for the Magnificent Seven. As of Wednesday's close, the group of mega-cap tech companies has seen its collective valuation surpass $18 trillion for the first time ever, according to Dow Jones market data. That means their shares are now worth more than the annual gross domestic product of every country in the world, with the exception of the U.S. and China. The U.S. stock market faces one of its final significant challenges of the year, with the upcoming Federal Reserve meeting, where investors are eager for insights on future interest rate adjustments. The Nasdaq Composite has just crossed the 20,000 mark for the first time, marking a significant milestone in a year where it has surged by 32%. Similarly, the S&P 500 has seen a rise of about 27%. Now let's dive into the data I want to show you guys. We begin with the U.S. budget deficit spiked by a massive $367 billion in November 2024, which was $14 billion higher than the median expectation of $353 billion. For the first 2 months of fiscal year 2025, the total deficit has reached an unprecedented $624 billion, marking it as the highest on record. This represents a staggering 64% increase from the $380 billion recorded for the same period last year, even surpassing levels seen during the 2020 pandemic. To contextualize, the average budget deficit during the 2013 to 2017 period was 3 times lower. The data clearly indicates that the debt crisis is worsening. The next generation of home buyers in China faces significant challenges as well. Currently, more than 1 in 5 individuals aged 16 to 24 in China are unemployed. Excluding students, approximately 19% of this age group are jobless, which is roughly 5 times the overall unemployment rate in the United States. To put things into perspective, China's high-yield HY real estate sector started 2024 having plummeted by 82% over just 2.5 years. Concurrently, one of China's largest property developers, Evergrande, filed for Chapter 15 bankruptcy. This has coincided with a collapse in real estate demand in China, largely driven by the onset of deflation. The U.S. Bureau of Labor Statistics has revised October's PPI inflation from 2.4% to 2.6%, and core PPI from 3.1% to 3.4%, marking 6 of the last 7 PPI reports revised higher. With November's PPI at 3.0%, inflation is at its highest since February 2023. CPI, PPI, and PCE inflation are all increasing, suggesting that inflationary pressures are intensifying in the U.S. Factors could include supply chain issues, demand surges, wage increases, policy impacts, global influences, and statistical adjustments. Corporate executives are selling their stock at record levels, with sellers outnumbering buyers 6-1. Reasons include high stock prices, locking in gains at peak valuations, tax strategy, avoiding potential future tax hikes, diversification, reducing company-specific risk, compliance, following pre-planned sales to meet regulatory standards, economic concerns, hedging against market uncertainty, personal finance, funding personal or estate plans, performance signals. Could reflect doubts about future company performance, though not always. Now let's see the S&P 500 heat map. For last week, Microsoft, plus 0.83%, Oracle, minus 0.95%, Tesla, plus 12.08%, Broadcom, plus 25.22%, NVIDIA, 5.75%, Google, plus 8.65%, Eli Lilly, minus 4.55%, United Health Group, minus 5.30%, Visa, plus 1.20%, JP Morgan Chase, minus 3.00%. Here's one of the most anticipated earnings releases for the week of December 16, 2024. Micron Technology will release its earnings on Wednesday after the market closes. Accenture will report its earnings on Thursday before the market opens. Nike earnings are scheduled for Thursday after the market closes. FedEx set to announce earnings on Thursday before the market opens. At a neutral fear and greed index of 50, here's what might happen. Towards fear, bad economic news or geopolitical issues could lower it. Towards greed, good economic reports or positive policy news might increase it. The direction depends on upcoming events and market reactions. Now let's do some chart and wrap it up this video. This chart shows the Dow Jones Industrial Average from 1929 to 2024. 1929, start of the Great Depression, marked by a stock market crash. 2000, dot-com bubble burst, a significant market downturn. 2024, a point of interest, possibly indicating a market peak or significant event. Here's the concise analysis for the SPY 1-hour chart. Support at 603. If SPY stays above 603, it's likely to aim for new highs, indicating strong buying support. Next, support at 601. If 603 fails, 601 becomes the next crucial support to watch. Pullbacks. Breaking below 601 could lead to significant pullbacks, suggesting a shift in market sentiment. Bullish scenario. Holding above 603 supports the push for all-time highs, driven by positive market sentiment. Here's a concise analysis of the QQQ chart. Trend. Upward, with prices trending above the ascending support line, indicating bullish momentum. Current price. Near resistance at $523.39. Key levels. Support at 520. A potential pullback area to fill a gap. Support at 516. A deeper pullback target if 520 fails. Market sentiment. Bullish, but with caution for potential pullbacks to test support levels before pushing for new highs. Trading strategy. For bulls, buy on dips to 520 or 516 if support holds, aiming for new highs if the price breaks above 523 with volume. For bears, watch for a break below 520 for potential shorting, targeting 516. Here are key economic events for the upcoming week. Monday, December 16th, NY Empire State Manufacturing Index at 530. Tuesday, December 17th, retail sales at 530. This measures the change in sales of retail goods from the previous month, providing insight into consumer spending, a significant driver of the economy. Wednesday, December 18th, FOMC interest rate decision at 11 a.m. Additionally, on Thursday, GDP existing home sales, initial jobless claims on Friday. Core PCE at 5:30 a.m. All right, folks, that's a wrap for this video. If you enjoyed the content, don't forget to like and subscribe. Got questions or thoughts? Drop them in the comments and I'll respond as soon as possible. Thanks for watching, and I'll catch you in the next one. Take care.